Good morning, Ite, Shahab. Everyone doing okay? Have a good weekend? Deepak. All right. So, good morning, Sinatra. Good morning, my trading warrior brothers and sisters. Let's have a good week. I'm doing okay. I just wanted to talk about the S&Ps for a few minutes. Added. Okay. So, the S&Ps, I was thinking about it over the weekend and I was talking to traders about this. And, everyone I interviewed, you know, everyone thought they had it at 61.8 up here. And last week, I was bearish and we had a nice little break. And I was thinking about it that it was almost too pat. The 61.8, sell in May and go away. And the poem I wrote about 61.8, could you feel it resonate? And right when you think you know the tricks, it stretches to 78.6. So stop hunts look very likely now above these highs, and 78.6 is all the way up here at 3,100, which also happens to be the megaphone line up here. Just look at it. Comes in up here a little under at 30.86. And the guys were looking for this 200-day moving average. That's at 3,000. There's a gap there. Okay. Pay attention to Brock. He's fade him at your own peril. Been listening to his commentary for a while. Okay, so let's get to really the star of the show has been silver. I actually thought that we might stop at this 61.8 level. Blake talked about that we were above it, but on the daily, it even cut through the 200-day like a hot knife through butter. And we're actually trading a little above 78.6. So, the gold silver ratio said silver was going to continue to lead it. First time I've seen silver up 5% in a day in quite some time. Gold, yeah, gold made new highs. It took out Friday's highs by $10. And there really isn't any clean divergence unless you go very short term, like to the 1 hour. Also notice that 1767 was 1.27 extension. But, I'm looking at what Andre has in the gold, and he just came up with a new update on his 4 hour. I'm going to share it with you guys who aren't subscribers, and you'll see the value of it. Yeah, people are asking me if I'm still bearish gold. I still think this is a fifth wave. You never know how big fifth waves can stretch, but like I was saying, we're not confirming on the daily. We're not confirming on the 1 hour. We are diverging here. But if you go to things like 4 hour, look at that RSI. Okay. It looks like it will confirm on the daily silver, 1830 now. Okay, that's another 90 cents. Anyway, we'll see what happens with gold this week. It's almost everything is binary. If you notice, you would think if the S&Ps were doing better, that gold wouldn't be doing as good, but everything's binary. Everything went down together in March, and since then, if you think about it, everything's gone up. Crude's gone up, metals have gone up, equities have gone up. So we really kind of had, I forgot to talk about it, kind of a binary market. It may have been Andre, but I want to show you Andre's work. Here it is. So Andre has a lot of different potential targets based upon different harmonic formations here. And this is gold right here. If you want analysis, it's gold and you're looking at gold. He gives you all the various options of harmonic potential targets. And yeah, this is the gold. The lowest one he had was the bearish butterfly and he's got that 127.20 at 1771. So came close to his lowest potential target in gold. And as you can see, he has 1787, he has 1800. And, if you're a classical technician, which I am to some degree, you just look at just the width of the formation is $80, right? From here to here. And you get $80, you tack it onto the breakout, gives you 1800. But, I just think that there's, a potential top brewing. Uh, the fifth wave, I don't know if we're in 3 of 5 or 4 of 5, but kind of late in the game to be getting long gold, in my view. This did not surprise me, but I was early trying it Friday. I'm still there, and the reason I'm still there is with real reduced leverage. The dollar is so boring. It's so boring. Still in this rectangle. Um, Over the weekend, when I was talking to some traders, I thought there might be a possibility that we try this 101 level for a stop hunt. Head up above here. I know a lot of dollar bulls are going to call this a breakout, and then 103 will be a layup. I'm just looking at how it's struggling to get back up here. Look how quickly it got back to 101 here. About 5 days. Here, the same, and here it seems to be taking longer and struggling. Sometimes you can see it just by how much time it takes to get to certain levels, and this is taking the most time of the previous two. Dixie Divergent on the 1-day RSI. I don't know how you could say um, it's diverging unless you go shorter time, Phil, because to diverge, you do it at highs and lows. So I would really have to break it down so that I don't even see the 103 and start looking at some shorter term stuff. And you're right, you know, here's the new high, the high we had last week, and it did not confirm. So good eye, but the 1 day is not. Uh, DAX broke out. Yeah, so that makes sense that um, I think Nasdaq's going to be at new highs. Maybe Nasdaq does eke out a new high during this, but now I think, and we're not that far away on the S&Ps, that we could go for these highs over here, which were 61.8. I may have had my fibs wrong, but looking for stop hunts to take out these. And the reason I thought that was because of the off number. My colleagues will cover all of that, and so the off number to last week was 2030, and we didn't close. I mean, it was 2830, and we closed above it on the weekly last week. This week, the 2-week off number is 2935, so we're not even there yet. We're almost there, 2935. So we could end up with a 2-week buy signal after not getting a 2-week sell. So those off numbers work, because the off number on Friday said don't go home short. Why? Because you didn't have the 2-week reversal. Okay. So you don't know until the candle closes. I mean, there was a time we were under the 2-week off number, under 2830, several candles, but didn't close there. So I try and anticipate at times how candles are going to close. It's a dangerous game. What You don't know what kind of candle you have till it closes. That's the main lesson here. You try and get an edge on a candle by predicting how it will close, and your consistency will be lower. So it's something I have to keep reminding myself, is that it could be a bearish candle, it could be a bullish candle, but I don't know till it closes. So that was a pretty important thing in the S&P. So we'll see where we get to. See if we head up, and I do think we'll have a stop hunt up there. So we'll see. You know, oil I've been out of touch with. Since we had this back here, you know, kind of screwed up the charts, but boy, you can't argue with it, can you? What looks bearish? See what I mean? So everything's going up together, and I would guess that, you know, when the S&Ps peak out, so will gold, so will oil. So it's almost like with what's happening in the market, it's pretty binary about things going up and down together, not much separation. And the only difference is relative strength and magnitude. And you have to say, although we're not at new highs, the star of the show was silver and gold making new highs, right? Whereas the S&Ps, remember, the highs are 3,400. So, you know, we're not even close to new highs, where gold blew them out. Silver hasn't blown them out yet. Anyway, I do think that we're not going right to new highs in both in the silver, and gold's coming off a little bit here. So I did add last night right around here at 58. Now I'm not the first step, and then I'm going to turn it over to Blake, is I'm not talking about, you know, 1400 gold right here, but we could very easily get a pullback to the breakout at 1720. There's some confluence with moving averages. And how do you know when the gold rally is ended? If we negate the breakout. So I'm sure there's going to be plenty of buying back down here at the 1720 level. Jay, I looked at Canada, and Saturday it looked like it was going to break out, you know, and, you know, I guess I could adjust this triangle line here. And this was the daily going home Friday. It looked pretty good, but you know what? I think you could give it a shot for a short, risking say 141, 141 and a half, and see if we finally head back down to 138 and a half. Under 138 and a half, it's going to look like a descending triangle, and you basically have 700-800 pips from here that could take you down into the low 130s on a breakdown. I'm going to save the MEX for Blake. Blake is one of the better peso traders I know. I think it goes back down to the days when he was a teenager and went to Tijuana and had some fun down there illegally having beers. So
Yeah, that was it.
he was, huh?
That was it.
Isn't that when you first traded? Wasn't that your first peso trade?
That was it. back before they even used to check your IDs at the Tijuana border.
Oh,
you remember those days?
I do, Blake.
They didn't even care. Like, you could walk back and forth.
Yeah,
you know, it's no big deal.
Now you need a flak jacket.
Yeah,
to go down there. You know,
I'm telling you, back in the 80s, you could just go back and forth.
Anyway, I was just guessing that was your first peso trade.
Well, it sure isn't my last, because I actually you were talking about the peso. I just picked it up, literally this morning at 64, right here. If you were in the chat room, I picked it up off of the support. This is triangle support. It's 88% retracement. Market's pretty bullish right now, and that's, you know, pushed us lower towards this support. My thought process was, well, you know, the risk reward here is very minimal. You know, if I bought it at 64, my stops are below 58, which is right here. Like, if you here, let me draw it. It's easier if I draw this for you guys on using this. Let's see. Draw. So if I buy it here, right? Oops. Buy it there. My stop is literally right here. Right?
Yeah.
And I'm targeting back up here. My risk reward is like 1 to 4, roughly. You know what I mean? I'm willing to take that off, especially right now. The market is up because, if you guys don't know why the market's up, Let me just get rid of this really
It
quick.
wasn't Paul on 60 Minutes, was it? That's driving the market higher?
No, it's this headline right here.
Hey, Blake, is this kind of like a do or die for the peso here, that you're scalping it here to see what happens? But if it fails, this long scalp doesn't work, then you might have a breakdown and the short side would look better.
Oh yeah.
Term.
I mean, the peso breaks down. I mean, this would be a massive breakdown.
Okay.
But this is what the stock market is rallying on right now.
Oh, okay.
Moderna's vaccine, promising results. How many times has the market got really excited about possible vaccines and it fades? Let's not forget that the global economy was shut down for a couple of months. Is there pent-up demand? Yes. Is the stock market, is it, flying high right now up into resistance? Yes, it is. We are right into resistance right now. Can the stock market go higher? Sure it can. But this morning, I think the market's pretty bulled up and currencies are responding appropriately. But I think that this bullishness will probably fade at some point today. So that's why I think that the US dollar Mexican peso will probably bounce off of this support. And that's why I picked it up, at 64. We're at 67 right now. Because that's, the way look, if there was a vaccine finished with phase 3 trials,
good point.
They're gonna produce a couple billion of that right now. It's a different story. This is phase 2 trial. Is that what it? Promising results in
warp speed,
early clinical trial. What's that?
Warp speed, as President Trump says, is warp speed program.
Yeah, I mean, whatever. The fact of the matter is that we still, it's still got to get through a lot of different clinical trials. And is there pent up demand in the economy? Sure, there is.
Can I just address that pent up demand for just a second, Blake? People think that once and if things get back to normal and everyone goes back to work, that's it, and you could just forget about what happened behind. But if you just give a personal example, say, for example, you weren't getting paid for 4 months, 5 months, so you had no revenue, you're just building up debt. And then the 5th month you went back and you got your your salary, what you're getting prior. What about that lost revenue? How long will it take you to catch up to replace all that lost revenue? And for you, it's going to be after tax income that you went through, maybe 20, 30 grand of your savings. You're going to have to make up for that. And people aren't seeing, they figure we turn the switch on and everything's back to normal. They forget about the car wreck and the loss of capital and revenue that's taking place now.
Dale, good morning. Especially if we consider at the same time, I mean, just adding to your point, that we know from statistics that 40% of Americans, and America is a rich nation, right?
Yeah.
Doesn't have more than $500 on the side.
Yeah. So, I mean, there is all that lost productivity and revenue and wealth that is going to take time to make up for that gap, just like it would in your own life. If you were unemployed and weren't getting unemployment insurance for 6 months, you'd have a hole that would take time to fill up. I just wanted to bring that up, only because I've experienced it. Just because you turn on the light switch doesn't mean when you're down and shut out or unemployed that things are back to normal for you.
Right. No, I think you guys all make valid points, and and so that's why I don't necessarily think that the S&P is going to all-time highs, where a lot of people believe that. I think that the S&P will probably, get to the 200-day moving average, or it can. Let me say it can get to the 200-day moving average. I just don't know if we're going to get all the way up there. You know what I'm saying? Yeah. So we'll see. I mean, we'll see how this. We'll see how things progress. Like I said, that's why the market's up this morning, and we're pushing right into resistance on a Monday. Turnaround Tuesdays probably more real in this market environment than anything. So, we could get, just a turnaround as all these hopes fade going into the rest of the week, as all this buying has come in on Monday. So we'll see. But I think you guys got to be very, very careful being long risk right here. Dominic in our chat room, he was pointing out this, I think he was pointing out on a different indice that, we got a little head and shoulder pattern here. But I don't play head and shoulder patterns as continuation patterns typically. So I trade them as reversal patterns of a bigger trend. Like this would be a reversal pattern of this uptrend. This would be a continuation pattern. So I wouldn't play it like that. However, that doesn't mean that, that this can't play out up into the highs, around here. So I think we just have to keep an eye on the markets and where they're at. I wouldn't get too carried away with bullish risk right around here. That's for sure. And if you're looking around at the rest of the currency market, I mean, the dollar has come off, and I was expecting the dollar to strengthen this week. And that's not saying that the dollar can't strengthen this week. I was expecting the dollar to strengthen this week if stocks were going to be weak, but stocks are strong. So that is naturally going to keep the dollar down. When stocks are rallying like they are right now, the dollar is going to be weaker, and we see that the Aussie is actually at its highs overnight. The Kiwi is also at the highs overnight. The dollar Canadian has slipped down towards the lows, and the dollar Mexican peso obviously is near support where I'm buying it. But the dollar is going to be under pressure if stocks are higher, and that's just the name of the game right now. If stocks come under pressure, the dollar is going to be bought. And so as long as you understand that concept, that'll help keep you on the right side of the dollar. Like I said, during the week ahead video, I was really expecting the stock market to be under pressure today, but there are tape bombs out there like this Moderna vaccine tape bomb, and that's gonna entice and excite animal spirits, and that's exactly what it did this morning. Do you buy into the hype? Well, that's a question for you. Obviously, if I'm sitting here buying the dollar Mexican peso, that means I'm not, right? I mean, and risk reward for me, I know where my stops are at, and they're not very far from where my entry is. So I'm willing to take that risk reward anytime. If I can have a 1-to-4 risk reward ratio, I'll take it every time. And that's what I, am seeing here. There are obviously other developments that are happening right now, but that's the one that's I think pretty predominant, that you guys can see that we're really close to these levels. What else? Oh, gold just came off, and I'm not going to steal too much thunder from Steve and Stelios as they come on, but gold was sitting up near its highs, and then as we were starting as Dale was starting the webinar, all of a sudden gold started just coming under pressure. I think the thought process is there. Excuse me. The thought process is there. If things are better, I don't need to own a bunch of gold. But at the same time, I'm going to tell you that I think gold is a buy on a pullback, because don't forget all of the liquidity that's been added to the markets. I think you have to use any pullback to be a buyer of gold. But we notice, and let me point the very obvious out here. Notice how we continue to make new highs. Yes, relative strength is divergent. I understand that every time it makes a new high, relative strength is divergent. I get it. But that isn't stopping gold from making new highs. For those of you that, don't know how that's even possible, that, wow, relative strength is diverging, yet price continues to make new highs. Go take a look at the dollar yen when it went from 80, 82, 85 roughly, 85, 88 yen to 120 yen. Back when Abe Abe announced his three-pronged, three-arrow approach to rebuilding the economy. you'll know how. You just go back and look at historically how that happens. So don't get too excited about, oh, it's divergent, it can't go up anymore. It can, and it will. If it wants to, it will. So, but gold is coming under pressure right now, and I think that it's realistic to believe that gold could actually come down here and see, 1720, somewhere in that neighborhood before it bounces again. So if you're long gold, keep that in mind. And it is actually coming under pressure as we're speaking. It just hit a new trend low right here. And like I said, I think it can continue to come off as well. So Steve and Stelios, good morning, guys. How are you?
Good morning, Blake.
Sure.
What's going on?
Everything good?
Good. How have you been? It's very, very hot, actually. That's a problem.
Yeah, it's definitely hot where I'm at, and I hear it's hot where you guys are at.
Oh, yeah.
Summer is here for us. That's for sure.
Yeah.
I have my tween this week is turning into a teen. So my youngest is gonna hit his teens tomorrow. So
Oh, nice.
Nice.
Yeah.
Nice for him, not for you.
yeah. That's one step closer I'm to paying for college. So so anyway,
don't worry about it. College is going to be free by then, so more expensive than it has ever been. That means.
Yeah. I doubt that, but we'll see. Anyway, it's it's a Monday, and what do you guys make of this this news of this vaccine that is going to be hitting your doorstep in the next two minutes?
Yeah, great. No,
they've already sent me a batch for the family here, so I'm I'm waiting by the door, to open.
Your Amazon deliveries here.
Yeah.
Vaccine.
Your vaccines are there, yeah.
In its drone form. Okay, so how do you guys feel about this rally that we're seeing here?
You know what? I personally think that the Powell headline is more powerful than
I agree as well.
The vaccine. Fed mandate to buy individual stocks.
Yeah.
Oh my God, this is like the government buying private corporations. So we're going into communism or something like that.
Exactly.
Unless they sell it back.
If you remember, I had described that as the Marxist wet dream some time ago. In essence, governments are now just buying private property and companies and the factors of production. I mean, who would have thought?
Yeah, but in my opinion, this thing is very strong for the long term, right? If the Fed is going to go in and buy pretty much everything now, except baseball cards and maybe some fine wines or whatever, I think that equity markets, equity indices are going to be going all-time highs and more and more and more till kingdom come.
Why not?
That's plain mathematics and inflation 101.
Speaking of an inflation and the real definition, more than $500 billion, Stelio, I don't know if you watched, of increase in the M2 supply in 2 weeks' time.
Oh my God. Yeah.
More than $500 billion.
Yeah.
So,
and that's the definition of inflation.
That's
right?
the definition of inflation. The
supply.
Expansion of monetary supply. Yes, exactly.
Yes.
Well, There you have it. Ladies and gentlemen, you heard it from the horse's mouth. So with that being said, I'm going to pass it over to you guys. Have a great week. We'll see you guys. Well, I'll see you guys tomorrow, or I'll see you guys actually on the daily roundup for those of you that are Forex Analytics subscribers. And Stelios, Steve, Dale, have a great one.
Thank you.
You do, Blake.
Good hunting.
You might want to see this first. This is the S&P forward 12-month PE ratio. Just look at the move it has done within a couple of months. The high, the hysteria bullish high at the beginning of 2018 was at 18.5. We had hit again in the beginning of 2020 a higher high at 19. We plunged from 19 to 13. And we're now at 21. So
within
in essence,
couple of weeks, right?
Yes.
Yeah, things are more overvalued than ever.
Exactly. Yes. So we might not be at all-time highs, as we were saying, but valuations are the highest they have been, and in many occasions with the only higher high found in the 99.com mania phase. So, I'm saying that so people can put in context that the fact that the market is still positively reacting to potentially good news is by itself illogical, because valuations are already in essence pricing in that things are rosier than they have probably ever been in the past, with an economy that has lost more than 35 million jobs. And, does it make sense to positively respond to something that potentially can improve the situation when valuations are there? You can answer that for yourself. I'm just showing you a mathematical fact, which is, a simple equation that pulls the forward 12-month PE ratio. So,
Steve, I saw a similar chart that shows growth versus value.
Oh yeah, which is also at the 99 highs.
Yeah.
Yeah, I know.
Growth
that's exactly
in an environment like this over value.
You know what else is also at all-time highs, Dale? Matching up the 99 precedents, the effect that the five bigger companies have in the stock market. So the concentration, in essence, yes, that's also at highs we haven't seen since back then. So, combine all that, add to the mix debt explosion, literally debt explosion. And, anybody can make a judgment of, if you think these are levels that make sense to be a buyer. Now, let me reiterate here. The fact that it makes no sense, it doesn't mean that it's going to move lower, right? Because we know that irrational markets can remain irrational more than you can stay solvent. There is no question about it.
Unless you're commercial.
Yeah, but on the other hand, the question is, can you really consciously go buy this and thinking that you're making a good investment? The argument is, don't fight the Fed. Okay, I have a counter argument for that. You don't want to fight the Fed. You want to be aligned with the Fed. I'm 100% with you. Buy monetary metals. What is the Fed's number one purpose and goal, as they've been describing it? To beat up inflation, right? Trust me. That's the only part they're going to manage to do. So you don't want to fight the Fed. Buy monetary metals. Now, I don't mean buy today, right? I mean, we've already seen, like, for example, silver has exploded higher. The gold silver ratio in 0 time has pulled back from 130. Let me actually pull it back on my screen. So the gold silver ratio has already pulled back from 129.30 to 101, which was like historical highs.
Still at extremely high levels, right?
Still at extremely high levels. Put that in context. There you go. So you can see. We had been warning here that silver was extremely undervalued, and probably, it was a magnificent long-term investment. Now, already an explosive move. And in my opinion, because in my mind, it's not about if, it's about when it breaches through this trend line resistance, which roughly passes from like 1870 at the moment or so. I think that silver can move back to 26 like in 0.
Is the big level, yeah.
In 0 time. I mean, a lot sooner than people believe. Yeah. So you don't want to fight the Fed. Don't buy so overvalued stocks because there is still a big possibility that all that can unravel again within a couple of weeks. So, there's a lot of hype. A lot of people are buying with the idea that the Fed is going to be buying and bidding every single asset that's out there if needed. But, there are still huge downside dangers. And you've seen, because we had seen it in the past, and many of you also, were experienced to have seen it in the past, that, bubbles like that can deflate before you can even blink twice. right? So you don't want to fight the Fed and you want to be in a more secure place, monetary metals, as simple as that.
Our friend Dominic is saying that people are chasing yield basically, and they were willing to pay the premium. I agree. I think that also the market tends to get optimistic very quickly, always historically. So now what are we looking at? We're looking at a vaccine pretty much almost priced in. Yes, it's coming out. Is it going to be in 2 months, 3 months, or 6 months? It doesn't matter. It's going to be out. Then everybody's going to be back, and everything is going to be back to normal. And also, in the meantime, the Fed has got our back, and they're buying everything. Well, a lot of things have to happen for all this to take effect.
Yeah, and as we said, Stelio, the joke is that even if the vaccine could be ready tomorrow morning, and with some magical way being distributed the day after tomorrow to every single person in the population, right?
Yeah.
What's the best possible outcome? What's the best possible outcome, which is impossible? But what is the best possible outcome? That in 3 days from now we're talking about, fairy tales, but in 3 days from now, everything is back to what it was. We will still have the most overvalued stock market we've had in history, with the exception of one brief example.
Yeah.
That's a fact.
Yeah. Anyway, we have to remember what the global economy was like before the coronavirus struck, right? In December, January, and it was already turning, and it was really not in a good place. But anyway,
a series of lies again being told by Powell yesterday. He kept reiterating that the economy was, the best possible before this happened. Okay, what about the hundreds and hundreds of billions they were throwing since September, way before anybody heard anything about coronavirus?
Yeah, reverse repo.
Yeah, exactly. To prevent the repo market from blowing up. What was that?
Yeah.
One of the many examples.
Yeah. Anyway, it's I think the bottom line is that central banks are doing everything they can and more. And actually, to that effect, there were a few comments today and over the weekend. Andy Haldane of the Bank of England, he said in an interview that the Bank of England is examining negative rates, which is extraordinary, in my opinion, because I think we've seen that negative rates don't work. But they're examining that, and we know what the Bank of England are like. If they have a dovish exit, they will use it. A dovish tool, they use it every time. He said, we're examining negative rates, and we can't go back to Jobs' nightmare of the 80s. That's what he said.
And we know what it means when they say they're examining. When they get to the point that they admit that they're examining, it's like telling you that we've actually decided we're going to do that. We just need to finalize the exact date at which we press the trigger, right?
Yeah. So anyway, he said we can't go back to the Jobs nightmare of the 80s. I don't know how negative rates can prevent people losing their jobs, but anyway, I'm sure they know why. We also had the Lane from the ECB saying that they are looking and constantly assessing if they're doing enough and what the risks are for further downside and instability. And he did say that June meeting is still 3 weeks away, and they're still analyzing situation, examining everything. So look, every major central bank is looking at every potential option they have to bring yet more liquidity. So that's another argument in favor of equities and the markets as a whole. And I've said this before. I think if you close your eyes, you open them in 5 or 10 years, we're going to be a new all-time highs in the S&P, in DAX, or whatever.
There is a high chance. The question is, what about real prices?
Yes,
because in nominal prices, I think the chance is extremely high, extremely high, like 90+%. Yeah. But if you ask me, what is the chance that we're going to be at an all-time high, adjusted for real inflation? I wouldn't be that certain about that.
Yeah. Anyway, we'll see how that goes. Some of our friends are asking about crude.
Crude,
I read that there was a survey. I mean, I don't know if you can take that with a pinch of salt or not, but basically it looks like Chinese activity is going back to where it was before the coronavirus pretty quickly. So that might be one of the reasons why we're seeing oil price going higher. Also, I think there've been a lot of people who saw what happened in the last expiry in May, the May future expiry, sorry, in April, and
they were scared about it.
They thought it's going to do the same because what's changed in terms of storage and in terms of the general demand situation. Well, not much. So why should oil be at $25? Maybe it can go back to zero or negative. I think a lot of people have been caught short, and maybe we're seeing short covering. But one thing's for sure, oil is ripping, absolutely ripping.
Yeah, and we had said here on the webinar that a break through the confluence of resistance is at 20. I remember specifically I had mentioned should get oil back to 25 in no time.
Yeah.
As it seems, no time was 2.5 days. So yeah, quite close.
Crazy. Yeah, you did say that.
Yeah. And I think, Stelios, that we can end up at some point, we will end up having moves like today, 10% moves, happening every second day or whatever. And people are still going to be trying to short crude. But crude is also a tangible commodity. Crude is going to ceteris paribus benefit from all this monetary lunacy. Anything that has an intrinsic value will eventually.
Yes. I think even cryptos. I said it before. My bias changed to bullish a few days ago. With all this. All this easing, all this money supply, I don't see, even though I don't believe in them, I don't see how the price cannot go higher. How much higher? I don't know, but just with everything indexed as a dollar asset, has to go up. That's my.
I'd rather take my chances with metal.
I don't know any, but I do on silver and gold. Yeah, but I'm just saying.
Anyway. Natural gas, somebody's asking about it. Another, from what it seems right now, another higher low is being crafted here, right? So you can see that we have a series of higher lows, and we did find support. I had warned when we started plunging that what's 161, because that's an important area of support. We did stop here. And so far, the series of higher lows and the ongoing divergence in the RSI is still there. And we see that crude is exploding higher. Having said that, just, totally out of curiosity, let me see what TOD is doing. Nice. I own some of that. Okay, so did you remind me, Stelios, do you also have crude oil companies? He's gone. Okay, so let's go through the charts really fast. Now, Blake, I assume I lost a very few minutes. I assume he covered the S&P. The S&P could potentially just be crafting another triangle here, which would definitely have bullish implications. Having said that, I do think that a little bit above 3,000, where we have this confluence of resistances, or even at the 78.6 at 31.37, even if we break to new highs, I do think that we're going to fail, because I do think that eventually this market will realize how much ahead of itself it has been running. So my bias for the next big move is still lower. That doesn't mean that we can't first go higher. And as I said, this consolidation, since we didn't end up breaking lower from 2780, still has a good potential of producing one more high. And, of course, whatever that means for every of the correlated assets. For example, as you see, the chart here in the Aussie USD is a very equivalent one, right? You clearly see a triangle. I've drawn it and I've shown it on the 4-hour chart, but we can as well also put it here on the daily. So there it is. Right? So there is the possibility of producing one more high here as well before lower. Alternatively, of course, if we do break below 63.70, that has bearish implications. But it looks like we can, move first once again higher before we actually fail. Kiwi looking less bullish than the Aussie because it has produced a lower low. It's clearly underperforming, and you can easily see this in the Aussie Kiwi. One of the reasons I wanted to show the Aussie Kiwi is that all that is good, but keep in mind that the Aussie Kiwi is now testing after a very strong run higher, especially considering that this pair rarely moves very strongly. So it has already produced a very nice rebound from parity all the way up to almost 110. So some type of a pullback here would be warranted before you can look for another push to the upside. But it is what it is. Look at Kobe CME contracts. Let me go first to previous questions because we had quite a few. USD. Okay, so you want to know about the Chinese yuan? There it is. I think it looks good for more upside, right? I mean, you can see this as a bull flag. You can see this as a smaller bull flag. I have to say, admittedly, the momentum, the upside momentum is like very weak. But on the other hand, there is absolutely no bearish sign here. So, if you really want to be trading this, which I would rather trade something else since it doesn't, really, it's not really eager to move anywhere. I think the path of least resistance remains to the upside. We also had a question about USD CAD. Listen, I've kept repeating like probably almost every single day the same thing. USD CAD, first of all, in my eyes, remains one of the best looking US dollar pairs, but it still hasn't broken through the triangle. So, as long as it doesn't, it's still stuck in this consolidation. Once it does, I think there is a lot more upside. 142.60 is going to be the first area of resistance. And once we break through that, we then also trigger this rectangle, which points for a move all the way to the 146.70 previous high. So, USD CAD still looks quite healthy. So if I was to trade it, it would only be to the upside, at least as long as it trades above 138.50. There is absolutely no evidence that you should be doing anything else. There is a question about USD MXN, which I think that Blake covered, and I don't have much to add. Here it is. Just very briefly, testing triangle support. Blake said that he just bought it because of that, and he's absolutely right. The risk reward makes 100% sense. Gold dropping, yeah, gold dropping, but I've seen people, and I said it again and again, predicting that gold is going to reverse and move lower again and again and again. I've been bored of listening to this since we broke through the big formation on 1360. Bottom line, everybody that attempted to short gold since we broke through 1360, with the exception of this move lower, which was very brief. It was quite deep, but very brief. They've lost money. End of story. So, you can go ahead and fight gold and silver. Personally, I'm long through owning the physical commodity, and I don't even care if it's going to dip lower. I'm going to keep holding to it because I know that it's going to be a lot higher in the not so distant future. I mean, central banks are making sure that's going to be the case. It's not about speculating. Yeah, that's a good comment, Alex. Unless unemployment is paying you more than you made in the first place. That is a good point, Alex. The only thing is that, of course, that can't go on forever. It's of course it's a stupid political decision that's going to have huge downside. It has huge downside risks, and it's going to blow up in their face. I have already seen some of them realize how bad of a decision was to pay people to not work without taking into account how much they were earning previously. So in essence, paying some of them more than they were actually paid to work. And now because politicians love to do that, which is try to correct one mistake by doubling down and doing another mistake. I've seen that they now have some brilliant ideas like paying people to go back to work something like 3/4 of what they were paying them to be unemployed. So in essence, giving them the incentive of going back to work by paying them $450 per week to go back to work, and they can also keep whatever they're earning. So you be the judge of that, but in my eyes it's another clear example of doing one mistake, and then instead of admitting you made a mistake, that you should have actually used some criteria based on what people were being paid in advance, and pay them a percentage of that to not work, so they can still have an incentive to go back to work when work is available again. So instead of admitting this is a mistake and in essence fixing the initial idea, tweaking it so it makes more sense, now they want to fix a stupid idea by implementing a stupider idea, if you ask me. Because from an economic perspective, none of that makes any sense. MXN going to 1920 soon. We've already covered the MXN. They use the MXN. I think that this rally is short-lived. I'm waiting for US-China trade situation. I also think that it's going to be quite tough for it to keep pushing higher for much more before we have at least a very decent pullback. Konstantin, I like your comment about PASOK, but obviously nobody else here is going to understand it. How much is inflation going to be once all this is over with? Yeah, that's a good question, Dominic, because at the moment they're worried about lack of inflation and just keep on going. Yeah, something. The Fed is making a huge mistake. They think that they can tame the monster of inflation. Once it rears its head, they can keep it at bay. They can reverse policy and keep it at bay. Comment number one, we know that they've proved repeatedly that they are completely unable to reverse any type of policy. I remind you that I've been saying here on this webinar since years ago that repeating and reminding people that Bernanke in 2008, when he testified in front of Congress, he said that that quantitative easing one, of course, then it wasn't named quantitative easing one because it was just quantitative easing. I mean, they thought it's going to be only one. So he said that, it's part of temporary emergency measures that are going to be completely reversed as soon as the emergency is over. Guess what? Powell has said the same a few times during the past few weeks, that these measures are going to be reversed as soon as the emergency is over. Now, many believed Bernanke in 2008 because there was no precedence, and they thought that they can actually do that. Now, since we know that reversing meant that they were able to take the Fed's balance sheet from 4.5 trillion barely down to roughly something like 3.8, it was 3.7, 3.8. And now we're back at 7 trillion. Who really believes, who would be naive enough to believe that they have an exit plan? They didn't have an exit plan the first time they did it, and they ended up having ahead 11 years of an expansion. The longest lasting expansion in US history was not enough of a time for them to reverse emergency measures. So now, if there's anybody that believes that they will manage to reverse, a 10 trillion balance sheet or whatever it will end up being, because it's already gone from 3.8 to 7 trillion within a few months, and most of it within 2 months. Now, who is really going to believe that they're going to manage to actually reverse it this time? I have no clue. No clue whatsoever. Aliki, not your time to speak. Markets chasing yield, they're willing to pay. Yeah, could you please have a look at the cable in the light of the statement? Yeah, absolutely. Actually, perversely, the cable today, following that, everybody believed that the cable is going to plunge following the statement during the weekend that, you know, they're in essence going negative. I mean, that's not what they said, but in essence, that's what they meant. Now, something tells me that the news had leaked in advance, because look at the price action we had on Friday. A very bearish candle. I mean, this was a long Marubozu closing black, which, you know, if you looked at the rest of the dollar currencies, the dollar pairs, I mean, you know, it was a move that was like a lot more bearish than anything else that we saw. And as it seems, some people were just front running that move. Now, having said that, from a technical perspective, it's quite clear we've broken through this head and shoulders formation that targets the 61.8 in essence, because as you see, there is a perfect confluence of the head and shoulders target and the 61.8 from the 114 low to the 126.50 high, and you know, these come at 118.83. So I think that as long as we are trading below like 123, I think that the path of least resistance remains lower, and we can see the head and shoulders target being fulfilled. That's what I think about the cable. The Fed has to fund another 800 billion worth of bonds this week and another 800 billion in June. So there is 1.6 trillion of QE that needs to start now. Is this true? Haven't checked the numbers, but what do you find weird? I mean, the Fed's balance sheet has increased by more than 3 trillion, most of it within the matter of a couple of months. So yeah, as I said before, M2 increased more than $500 billion in 2 weeks. I just want to remind you that QE3 was like if I remember right, 80 billion per month. And now we have months that we're doing like $500 billion of QE. So yeah, I mean, whatever. Why not? Very likely. Oil we cover. You could buy long-term oil contract. Prices should be lower. I would look it up. You can look it up. I don't know to who you were referring to. Look at cable semi contracts. Yeah, I mean, we covered that. Can you analyze USD SGD? Yeah, we had a look at it at the end of last week, and we talked about this being a bullish breakout, right? So I think that, you know, above like 141, you should look higher. Could you please look at Aussie Yen? Yeah, absolutely. Here is Aussie Yen. So, you know, doubly rejected, 3 times actually rejected within the matter of a couple of weeks from the 61.8 of that last move lower. Now, having said that, obviously, if risk keeps on getting bid, at some point we should breach through the 70-17 area. If that happens, I would be looking for another leg higher, perhaps towards 72, where we find the 200 DMA, or a little bit higher towards the 78.6 at 73 before lower. But as long as we trade below 70-17, you know, there is a good chance that we're just going to move lower from there. Of course, you know, this is very highly correlated with risk assets. So that would imply that, you know, this stock index strength should fail very soon if the Aussie yen is not to produce a higher high first. Okay, Kiwi yen, you know, clearly, you know, looking weaker than the Aussie yen. We've already explained the reason when we were examining the Aussie Kiwi and when we were examining the Aussie USD and the Kiwi. this can still be a drag. This is the new signal for interviews.
Your kitty understands English, someone said. You have a great cat that's bilingual. Wow.
Yeah, you see.
Yeah, our guest isn't here. Is Richard Fields in the house? Are you on the field, Richard? Don't think we have one today.
James says most low-income earners can barely survive anyway and still have to get government assistance. Minimum wage too low. You mean minimum wage a problem? Because if you really feel for people that can't survive, then you can't be in favor of minimum wage. I've explained that multiple times. Listen, there is the sentimental approach, and I can all be politically correct here and tell you, you should get minimum wage to, why not, $30. I mean, I'm all for, I'm all for humans, right? I mean, I wish I could press a button and make every single person prosperous on the planet. Really, I would do it in zero time.
I have an idea.
No thought about it.
For you to do it.
Tell me.
Just manage everyone's money, the whole globe. And with you press your mouse, the whole world, the people that are poor will have extra revenue from all the pips you'll get them managing 1 billion different accounts.
Sounds good.
Huh?
Yeah, absolutely. Why not?
I would do it. I think they'd have a better shot with you, but I would try it.
So, coach, is your
I don't see him.
Okay, let me.
I feel like when people don't show up, Steve, it's like
Ronnie, start with my account, Steve.
No, when
Ronnie says start with my account, Steve.
It's almost like you have a date and she doesn't show up, and remember that? Did that ever happen to you?
Actually, no. I'm lucky enough.
Well.
It has never happened to me.
Oh my God! No wonder you're not, as humble as you should be.
I mean,
rejection is very healthy.
Well, no. That's let's be honest. This is not the only way to get rejected, right?
Oh yeah, but
I mean, I don't think there's anybody. I don't think that there's anybody that hasn't felt rejection, but that's just one form of it, right?
Yeah.
Now, I haven't experienced that form of it.
You're missing out. Anyway.
To be honest, I'm so many
you're a
years,
lucky guy.
I'm so many years with my wife that I don't even remember how any of that was prior to it.
I'm so old, I don't remember.
I'm
anyway,
like 16 years with the same woman, so I don't even remember what was happening prior to that.
So I don't think we have an interview, so you can just wrap it when you're ready, buddy.
Yeah, we have questions about the Nifty. Here's the Nifty. I had said in advance that it looks very ugly, and it looked like it would break lower, and that's what it's being happening here. The same friend is saying PM Modi India says 1 trillion rupee will be invested in every IPO of SME up to 15% of IPO if any small industry comes up with IPO. So they're underwriting 15% IPO of SMEs in India. Its effect. Please explain. Okay, I'll tell you something. There is not a single, I can think of at least, occasion that government has interfered with the free market and hasn't made things worse. End of explanation. So, they're going to interfere with that as well. They're going to mess it up. I'm pretty sure they're going to give a lot of incentives this way to conjuring fake, companies in essence, so they can just, siphon the money from government. Governments have never managed to be successful, and business men, I don't know what the word is there, governments cannot handle businesses. Whenever they have tried in the past or in whichever country, they failed miserably because they don't have the proper incentives because they don't use, the private sector efficiency, etc., because politicians use them as a vehicle.
New Deal. People are saying the New Deal was successful in the 30s, that built Hoover Dam and put all those people to work in the midst of the Depression. Can you say that was a failure?
I think that the only thing that a government can invest in and not make worse use of the money than
infrastructure.
Exactly. And why?
Okay.
There is an answer why. Because some parts of infrastructure, in essence, increase the efficiency of the private sector doing business.
Okay, good one.
That's why. For example, if you don't have good roads for companies to transfer goods, and by building better roads, for example, you decrease the risks in transporting goods, or you decrease the time of transporting goods, etc., then what in essence you do is enhance the efficiency of the private sector. So with the exception of this type of investments, anything else, leave it to the private sector. It's been proven again and again and again that they can build and make profitable businesses 1,000 times better than any government has ever managed to do in the past.
So instead of spending this money on relief for business and individuals, if it had been an infrastructure
the best relief you can provide to businesses and individuals is shrink government and finally let all that money go back to the real economy and find the proper use.
Stevie Cohen, who used to be, with Goldman and with Trump, actually said that if the government just laid out the blueprint, he's talking about the U.S. for I think he was talking about high-speed rail, that the private sector would build it. And
I have no doubt.
All they have to do is lay out, and that would be stimulative and also increase jobs. So that would
I agree
like
100%.
WPA.
I agree 100%. But in any case, the government has to be involved with that because, as you know, when you want to, for example, have a rail or whatever, there are several serious issues having to do with land, properties. Exactly. I mean, regulations and all that. So one way or another, for infrastructure projects like that, a government has to be involved.
Well, maybe he still has the president's ear. So, so we don't have an interview, bro.
Okay,
or Richard would be here.
That's absolutely fine. So we'll be back tomorrow. Who do we have for an interview tomorrow?
I mean, the rest of the week are some of my favorites. So let's see here. And I have a birthday coming up. Oh, Brent from Santiago AU Fund. And he's a very interesting guy.
James, you seem to be confusing, by the way, capitalism with cronism, which is a totally different thing. Unfortunately, the U.S. healthcare is a mess, but that's in essence because you have very few companies having control by, in essence, lobbying. So sorry, that's not capitalism. That's the exact opposite. That is actually what is the worst nightmare of capitalism. So don't confuse, a very sad example of companies doing whatever they wish with capitalism, because that's not how it works. Capitalism needs actual, real, proper competition, right?
Yeah. If people want to know what form of government every nation in the globe is taking right now, I've heard it described as scientific dictatorships.
Oh, yeah.
How do you like that?
In some sectors, I definitely agree with.
And we're going to have contact. We're going to have people contact tracers, and we're going to have all the software surveilling us because of COVID, and they're going to use COVID to get there. So anyway, and that we have the tools now that Orwell could not have even dreamed of. Maybe he did dream of it.
I totally agree with that.
Yeah,
I mean, we really live in an Orwellian planet,
scientific
right?
dictatorship. We think we're electing people, but they're not the puppet masters anyway. So that's enough of my stuff today. Yeah, we have a great interview with Brent at Gold, very timely. He runs a gold fund, and he has kind of a different take on the dollar, even though he's bullish gold. So yeah, tune in tomorrow for Brent at San Diego AU Gold Fund. So
nice. When do we have the other gold guy in June? What's the date?
Oh, Dan Popescu?
No,
I know.
no.
Oh, Henrik.
Yeah.
Well, I timed his interview for the break to be happening by then. So we have Henrik Thursday, June 4th. He's putting out there's a lot of buzz about that interview. He's promoting it, and he knows I'm not going to be throwing softballs. Even though I'm going to mute you. I'm going
to bring the fireworks. Don't worry about it.
I'm muting you. But anyway,
don't miss that interview, people. 4th of June. Don't miss it.
Don't miss any of them.
Yeah.
So yeah. So thank you, Steve. Let's have a good week and see what happens. Nice review of the board, and everyone have a great day. Good day to join and be part of our community. So, or at least give it a shot with a trial. If you're not happy with the trial, I will refund your money. So that's a wrap. Don't just count your pips, count your blessings, and we'll see you tomorrow. Thank you, Steve Volge. See you, face. Adios.